I think we have a problem here. The problem is that a lot of individuals are thinking that we have a high tax rate, which may be true. However, we need to understand the brief history of how we came about to this taxation. So, for instance, right now, as indicated where my cursor is, if you make between 10%, if you make between $0 and $17,850, your marginal tax rate is 10%. And of course, it increases because we live in a state of progressive tax rates. So, the more money that you make, the higher you are possibly being taxed, right? And this is up to the year 2013, which we have the same tax rates. These figures may change a little bit, but we still have the 10 to 39.6% tax rate. But where have we come from before? I'm going to move down here. So when we first instituted this reform of taxation in 1862, as you can see here, the marginal tax rate was normally between 3 and 5%, right? So there's a lot of individuals who became very rich during this time because it didn't matter if they made $100 million, they were still only taxed about 5%, okay? But for those who didn't have money, 3 to 5% was still a large number, even at that time. There was times, 1894, it was a flat 2% for everyone, right? Over $4,000. Then we started being a little bit more progressive in nature. We see here in 1915, it was between 1 and 7%, which is a far cry from the 10 to 39%, 39.6% it is today. And as we see here, 1916, of course, they changed it a little bit, right? Because of Reform Acts, because of the Revenue Act of 1916, because of the Revenue Act of 1918, we have here a whopping 77% marginal tax rate up to, right? So it has been more than 39.6% in 1918. So you can imagine making $1, and most of your dollar is going to this tax rate, right? Most of your dollar. So let's say you make $1, maybe you're only taking like 60 cents out of that dollar. You're only taking about 40% out of that dollar, and you're being taxed, and they're taking away about 60%. Huge number, right? This is why a lot of people sometimes were hiding their money in foreign bank accounts, and that's why sometimes today they still do. So we have here in, I think, about 1921 or 1922, it was up to about 58%. So for many years, it's been around the 40s, it's been around the 50s, but it's even been only 25% in 1925 because maybe they thought about funding the war to a certain extent and they need more workers. So there's different variables in the economy at that time, which was why it was up to 25% for several years, right? And it went back up to 63% because things probably shifted as far as the revenue acts that they had at that time. We have here in 1936, it was as high as 79%. Okay, but there is another number that's even higher that I'm trying to get to soon, and you will see. We have here 1942. 19%, again, you may be a low-level earner, 19% up to 88%. Okay, the government was taxing us a lot. Now, here's what I was coming to in 1944. The minimum was 23%, all the way up to 94%. So for individuals that are complaining about the 10 to 39.6%, it's been higher, 23 to 94%. Right. So we have come a long way. It was in the 90s for a while, and we've cut that in several type of reforms, and the people are speaking. So I'm just giving you a brief history of the federal income tax history to make you understand, to help you understand that it's been worse than what it is today.